Yeah, good morning, everyone. So we saw US market gaining marginally yesterday, and futures are also a bit positive. Asian markets are also indicating positive trend. We also recovered from the bottom yesterday, but the the tariff got implemented yesterday, and now 25% plus base tariff will be applicable to various sectors. The most impacted will be textile, gems and jewelry and auto, which will face direct impact and may see some slowdown in offtake in the coming period till the things get resolved. And then the 25% additional tariff may be coming in the futures, which if it comes, then will hurt very badly. Uh, so, apart from India, most of the markets are doing well in Asian market. We, because of the one of event, are not able to perform, but struggling at lower level. So outlook continue to remain dicey till we get some clarity uh, on this aspect and continue to see some pressure uh, in the near term. Apart from that, commodities are also more of a marginally down, either 0.5% decline in aluminum or uh, oil is down by around $1. So nothing so great happening in the commodity as well. So overall outlook is either sideways or some selling pressure may see in today's trade for Indian trade. I'll request technical team to take up from here.
Yes, thank you so much, morning, all of you. Today, the market is likely to open on a flattish note and we're likely to see some sideways momentum. Yesterday, it was a good day. Nifty has took a very strong support of 24,350 levels, and we have seen a more than 200 points bounce back rally and manages Nifty to close about 24,590 levels, which gives some sort of a relief sign. Now, going ahead, the immediate support is placed at around 24,500 levels. If it's break that level, then more selling pressure or say the profit booking can be seen into the market, which might take a Nifty towards 24,440 to 24,370 levels. Whereas on high side, as of now, 24,670 is the crucial resistance zones. If it surpasses that level on the closing basis, then we are likely to witness a bounce back rally towards 24,740 to 24,800 levels on the higher sides. Coming towards the Bank Nifty, for today intraday purpose, the support is placed at around 55,500. Any move below that level will see the extension of the fall towards 55,270 to 55,000 levels on the downside, whereas the resistance is placed at around 56,000, 5620. Stock specific, Zindal Steel and Power looks very good. This particular counter, we are witnessing a very strong momentum rally with good volumes. So those who are having any long positions, they can hold on. Even we have initiated a buy call at around 988 levels. We are looking for a target of 1030 to 1040 levels on the higher side. So hold your long positions as long as the counter stays above 970 levels. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have seen the strong reversal which came in yesterday trading session from the downside levels. Currently on the upside level, still you are seeing that Colorado positions are intact within the range of 24,800 25,000 mark. So if in today is the day of trading session, if Nifty again manages to go about 24,700 mark, then we will see some 150 points momentum on the upside level. As per the Gift Nifty opening, we are seeing that market is likely to open on a flattish note. So currently the range for the Nifty for next 1 to 2 day of trading session will be 24,500 to 24,700 mark. While on the PCROI front, in yesterday's session, PCROI shooted sharply from its oversold zone. PCR was almost trading near 0.63 level, from which it came near 0.74 level on the weekly expiry basis. Currently on the monthly expiry basis, we are seeing that PCR closed at 1.06 level, so it is a positive sign. Only the current data point is India VIX, which is continuously trading in the range of 11.6 to 11 levels. Till the time India VIX is not getting close about 12.5 level, till that point of time, trend will not be clearer in the market. Once India VIX goes about 12.5 level, after that we will see that the range bound momentum will get a breakout and the trend will get catch up in the market. While on the stock and sector specific front, counter that looks positive in today's session will be Siemens, Eternal, and Nuvama looks a positive. On the negative front, Indus Tower, JSL, and TI India looks a negative. So that's it from the front. Thank you.
Good morning, everyone. On the result front, Godrej Consumer Products yesterday posted the result. Result was marginally below expectations, mainly for margins. Gross margin was down by around 400 basis points. However, lower advertising costs limited the contraction of EBITDA margin to 280 basis points to at 19%. Revenue witnessed good growth at 10%. The management indicated mid to high single digit domestic volume growth in FY26 and double digit EBITDA growth. And the stock is currently trading at a PE of around 52 times to FY27 earnings, and we remain neutral on the stock. Kalyan Jewellers India Limited posted the result above expectations in terms of revenue with a growth of 31%. During the quarter, it has delivered healthy same-store sales growth of 18%, and the studded ratio remained similar to last year same quarter. Revenue from franchisee showrooms was increased during the quarter up to 43%. That impacted the gross margin. However, EBITDA margin was stable at 7%, largely due to improved operating leverage, procurement gains from the pilot lean credit procurement project, and metal gains in platinum and silver. In the con call, the management reiterated on its lean credit pilot project many a times, which focuses on improving procurement. Currently, it is being piloted on a corporate level and seen good results with generating higher ROCE than corporate level ROCE for India. Gradually, it has plans to implement across regional brands. The stock is currently trading at around 54 times to FY27 earnings, and we remain long-term positive on the stock. Titan Company posted the result ahead of expectations for both revenue and margins. EBITDA margin reported at 11.2% versus 10% in the last year same quarter. In jewelry segment, the management expects studded portfolio growth to pick up, and as it highlighted, buyer growth in studded portfolio is higher than gold. Watches delivered good growth in Q1 and expects to continue its growth trajectory. In eyewear segment, it is focusing on repositioning the brand with multi-price, multi-brand offering. The management has guided for the margins in the range of 11 to 11.5% for FY26. However, Q2 jewelry performance is likely to moderate, impacted by the high base from last year following the customs duty reduction. The stock is currently trading at 65 times to FY27 earnings, and we remain long-term positive on the company. Yesterday, we also attended the maiden con call of Ellenberry Industrial Gases. During the quarter, the company's core operating business has witnessed good performance with 25% revenue growth and 37% of EBITDA margin. Company's business is mainly contributed by three gases: oxygen, nitrogen, and argon, with 90% of revenue share. The revenue growth during the quarter was mainly led by its ramp-up in operations at its recently commissioned capacities. These capacities will continue its ramp-up in the future. Also, it has planned commissioning of merchant plant in East India in October 25 and another on-site plant for steel company in March 26, where they are expecting fixed fee income from the on-site operation. During the quarter, argon has seen increased contribution from 7% to 9%. The same has contributed to margins as it has higher realization in the market compared to oxygen and nitrogen, more or less 3 to 4 times higher, and it features double the margin. As discussed earlier, recently announced acquisition of True Air Industrial Gases will help them cater to its key markets of Bangalore and Hyderabad with ease. The management has guided for 25% growth in revenue and EBITDA margins to be sustained at 37% level with small upside, with increase in argon contribution of up to 15% by FY26 end. We remain positive on the stock. Thank you.
Good morning. News update. The RBI has granted a universal banking license to AE Small Finance Bank. So this is positive for the stock. Secondly, Life Insurance Corporation of India has posted its results. Results is above expectations. Premium grew by 5% year on year. Its APE grew by 9% year on year. Its new business margin came at 15.4% versus expectations of 14.9%. Its profits grew by 5% year on year, and its 13th and 61st month persistency improved sequentially. The stock is trading at 0.7 times trailing MCAP by EV, and outlook is positive for the stock. That's it from me. Thank you.
Good morning. Apollo Tyres posted the result in line with expectations. Its revenue from operations grew by 3.6% year on year, and EBITDA margin is in line with expectations. PAT is above the expectation, and stock is currently trading at PE of 15.8 times FY27 EEPS. Cummins India Limited result is above the expectations. Revenue from operations grew by 26%. EBITDA grew by 33% year on year, and EBITDA margin came at 21% versus expectations of 19%. PAT is also above the expectation, and stock is currently trading at PE of 46.9 times FY27 EEPS. Sandhar Technologies result has declined. Company's EBITDA declined on quarter and year on year basis. Its EBITDA margin came at 7.6%, decline on the quarter and year on year basis, and PAT has also declined. Stock is currently trading at PE of 16.1 times FY27 EEPS. Thank you.
Good morning. Ramco Cements Limited posted their results marginally below expectations. Offtake came at 4.1 million tons versus the expectations of 4.5 million tons. It has declined 22% quarter on quarter and 5.5% year on year. This degrowth was in a view of weak demand due to early monsoon rains in Kerala. In eastern markets, many infra projects nearing completion amid unseasonal rains have dampened the demand. Consequently, the cement capacity utilization is at 68% as against 77% during the corresponding period previous. The reason for reduction in capacity utilization is due to additional capacities aggregating to 1.3 metric tons created by the way of debottlenecking after Q1 FY25. EBITDA per ton came at 965, which has grown 60% quarter on quarter and 31% year on year. Revenue from operations declined 13.5% quarter on quarter and was flat year on year. The cost of raw materials per ton has increased by 7% YOY for the current period due to levy of mineral bearing land tax of 160 per ton of limestone in Tamil Nadu from April 25. EBITDA margin came at 19.2%. The stock is trading at 17.3 times FY27 expected EV by EBITDA. National Aluminium Company Limited posted their results below expectations. Revenue from operations have declined 27.7% quarter on quarter, but have grown 33% year on year. EBITDA margin came at 39.2% versus the expectations of 42.7%. The PAT is below expectations. The stock is trading at 5.5 times FY27 expected EV by EBITDA. We will provide the further updates after the con call today. Thank you.
Yeah, apart from this, we attended the call of GPT Healthcare about the Dum Hospital, which saw a sharp decline in occupancy by almost 100 basis points year on year. It is mainly on account of the shift in case mix. The Dum Hospital is highly focused towards kidney transplant, which management is shifting to other therapy, and that's why that has led to decline in revenue and profitability. This is the hospital which is generating one of the highest revenue and the profitability for the bank, and that's such a result got impacted. Management expect that this change will take some time and will reach normality in next 6 to 9 months, and till that time the operation utilization can remain lower. Apart from that, Raipur, they expect new started hospitals to break even in 12 to 15 months. Other hospitals continue to do well. Agartala can still do better in coming period with the start of onco therapy over there. So overall outlook in near term because of this disruption is neutral. But if we talk about long term, like 12 months plus, the outlook is positive for the hospital. Apart from that, we attended the call of VIP Industries as well. Result apparently was looking bad, mainly on account of decline in sales and also margin came off very low as against expectation. But management has indicated that the lower margin is on account of write-off of inventory of around 15 crores. And company has taken one-off cost of around 10-11 crores. So excluding that, the margins are somewhere at around 9 to 10%, which management was guiding. But the key concern is the growth in sales. They saw sharp decline in e-commerce sale because of the competition and which indicate that they are losing market share. PPC Safari has grown by 17% in this quarter, whereas VIP is losing around 12%. So VIP is consistently losing market share to other players, and which is cause of concern. So outlook from here is negative for VIP industry. Though there is a change in management, new management is taking over, and that will take some time to come up with a new policy and all. Uh, that's all from us, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. Yesterday, we had witnessed profit booking in gold and silver from the highs. Today morning also, prices have opened gap up, but one need to be cautious as if prices are sustaining below 1 lakh, 1 lakh, 2000, then we might witness some profit booking. So strictly for trading purpose, one can sell with a stop loss of 1 lakh 2300. And again on downside, 1 lakh 1500, one can initiate a buy and maintain a stop loss below 1 lakh 1 lakh 1300. And in silver too, prices if are sustaining below 1 lakh 15,000, then we expect some profit booking till 1 lakh 13,200 on downside, from where one can also initiate a buy. 1 lakh 13,000 seems to be a good supportive area, so one can initiate a buy from these levels also and maintain a stop loss of 1 lakh 12,500. In metals, a bit range bound movement is witnessed in copper. Prices are resisting 888 levels, 890 levels, and are supportive at 880 levels on downside. So it could be in a range bound. For trading purpose, one can trade within this range. And zinc, we are expecting prices to test to 271, 272. So buying with a strict stop loss of 267 is recommended. And crude oil prices are continuously drifting down, though prices are at a supportive level at 55, 80, 55, 50 levels. So one can expect a pullback, and one should strictly buy with a stop loss of 5500. And on upside again, 5700, 5730 are the levels where profit booking is advisable. Natural gas also, we are expecting a pullback, so buying is recommended. One can initiate a buy with a stop loss of 260, and upside we are expecting 280, 285. So buying on dips in natural gas is recommended. That's it from us. Thank you very much.